Hello traders, the title of this video is The Good and Bad RSI Oversold Trading Methods. Let's get started. The RSI stands for the Relative Strength Index Indicator. It's a momentum oscillator, and most technical traders love to trade the oversold RSI. The question is, what is the good and the bad RSI oversold trading method? All right. So on this chart here, I have the RSI period 14, and I've highlighted the oversold RSI on my chart. RSI is oversold when it D below the level of 30. All right. Talking about, I'll start with the bad RSI trading method. All right. So, in fact, there are two generations of RSI traders. All right. So, you want to understand what is happening in the financial markets. So, first traders learn about the RSI, and the first generation, how were they trading the oversold RSI? The first generation of RSI traders were buying each time that the RSI is oversold, because of the misconception that when the RSI is oversold, is equal to the financial instrument oversold. But this is completely false. The RSI may be oversold, but the financial instrument can continue to go down. So the first generation of RSI traders will only buy anytime the RSI is oversold. That trading method, that RSI trading method, is the bad RSI trading method. So it's just like when one is using RSI, like the first generation of RSI traders, one is in fact gambling. So one does not know whether it's going to go up or not, so one just buy. There is another problem that those type of RSI traders are facing, is that they face the challenge of timing the market. So RSI D below 30, all right, people will buy straight away. But what usually takes place, especially those who are day trading, they will notice that the price will continue to go down for a while. So as the price is going down for a while, some of those day traders and swing traders will be taken out of their trade, because not only they are using the RSI wrongly, they are also timing the market at the wrong time, all right? So they enter the trade and expecting the price to go up, but the price will go down first before, turning around. So those traders are using the RSI, are misusing the RSI, and also are timing the market wrongly. This is the bad RSI trading method. And sometimes those type of traders that belongs to the first generation of RSI traders can make money. Sometimes they give up everything because they do not master how to trade the oversold RSI. All right. So if you look on this chart here, RSI became oversold here, but the price went down a bit. Okay. There was another example here. The RSI was oversold. All right, right here. Follow my cursor. And as you can see, the first time the RSI reaches the oversold zone, all right, the price continued to go down. So among those who are trading the RSI, like the first generation of RSI traders, there is another group that will say, okay, George, in fact, the RSI should D below the level of 30 and then go back above it. All right, so they are a little bit more patient, and they will wait until the RSI turn around below the level of 30 and goes back above that level. Sometime those traders will be rewarded. But there is a solution traders can use to avoid trading mistakes. One of the simple way to improve the oversold RSI timing, one can just wait for the common center line along the price to be broken, and also the first bullish candlestick bar to pierce through it. All right, that will help those type of RSI traders. So common center line is kaput, first bullish candlestick bar is up, breaking above that common trend line, and then one can apply a top-down trading method to trade it. But still, it is a bad, okay, way, a bad method to trade, okay, the wrong way to trade the oversold RSI. So as you can see here again, the RSI, follow my cursor, okay, was oversold right here. See here, I'm here. It's oversold. But as you can see, the price continue to go down. Most day traders and swing traders will be taken out of their trade first before the price bounce up. All right. Now, those who are waiting for the RSI to turn around below the level of 30, you can see that here it did not work. The RSI returns above the level of 30, the price continued to go down. It's just a type of gambling using the RSI oscillator. This is not only about day traders, it's also true for swing traders and also for scalpers. So the reason why those type of traders are using the RSI in this fashion is because, this is the way everybody was trading the RSI in the past. RSI oversold, everybody buy. But as the market is becoming more and more sophisticated, and there are more intelligent technical traders, smart technical traders, those type of traders get into trouble because there are other traders that knows that though the RSI is oversold, they can sell if the price dip below that support level and find a resistance. All right, so this is a bad example, bad trading method, to trade the oversold RSI. So you may be saying to me, George, I know this already. What's the point of this tutorial? The point of this tutorial is to help traders to become expert in using the RSI oversold to trade to become expert RSI traders. So you want to know exactly what you are doing, and you want to know how to do it. The RSI indicator is a technical indicator, but it's ultimately a trading tool. So as a trader, one should learn to use the tool properly. So if one is just using RSI anyhow, one does not know exactly, all right? So it's not about guessing it. You want to know exactly how to trade the oversold RSI without mistake, with precision, so you can also, avoid trading mistakes. All right. So as I see here again, it's oversold. Here was not too bad. It bounced out, and people make some money. Here again, as you can see here, RSI is oversold. Here again, people are rewarded. The challenge for those type of traders is the timing and also holding position, until the price changes direction. Sometimes those traders will lose their position, which means they will lose money. Price will continue to go down, and they are taken out, all right, and the price now bouncing up. But the biggest mistake that those type of RSI traders are making is because they are just violating the market pattern. As I explained to traders before at dayprotrader.com, there are 6 biggest trading mistakes. But the number one trading mistake, in my view, is the violation of the market pattern. As you can see here, the market pattern is a declining channel. As I told traders before, it will determine the appropriate trading strategy one should deploy. So when the price, you already know this, when the price is in a declining channel, one should disregard completely the oversold RSI. Though the price may bounce up a bit, so because the trader was asking me today to record that video that I promised long time about long-term, medium-term, and short-term trend, all right, and I would post that at 248 Wave YouTube channel, all right. What those traders, what they are missing is that the fluctuation, they rally in a downtrend, a contra trend, they are risky trend. So suppose you are trading for your clients, all right, you don't want to waste your client money. All right. If you are trading for yourself, you have your own trading account. You don't want to waste your trading account. All right. You don't want to wipe out your trading account. So it becomes quite risky to trade oversold RSI when the price is in a declining channel. So conservative, cautious traders will not even bother to trade it. They will instead focus on the overbought RSI on the edge of the declining channel, where bearish traders are selling. You have to understand that when the price is in a declining channel, first, we know straight away, all right, that the market sentiment is bearish. Okay? All right. Now, the second thing that we know also is that the dominant force is bearish. So what's the point, all right, to be courageous trader, try to fight the dominant force? Personally, I think one should align with the dominant force, which is a bearish force. One should concentrate on selling. So this is about the bad oversold trading method. Now let's go back now to the best oversold, or I was talking about the good and the bad oversold RSI trading methods. So I hope you like that title. So the good RSI oversold trading method consists of trading the oversold RSI in a rising channel, price from a higher low, pull back, a price from a higher high, that's the first condition, and a pullback, and display a higher low that will, and the RSI is oversold. That is the best time to buy when the RSI is oversold, using, most importantly, different time frame trading method. All right. So in a rising channel, concentration on the oversold RSI, declining channel, concentration on the overbought RSI. So the good way to use the oversold RSI, either in a rising channel, or here, as we are here now, is when the price breaks above that declining channel and form a bullish chart pattern or a higher low, or retest that a bearish channel, then one will implement a top-down trading method to trade it. All right. So what we are doing here is we are polishing our RSI trading method, because a lot of traders can trade, but there are few things that they are not aware of, and they are just going round, wasting a lot of money. All right. So one more time here, just before we close this video, you see that again the RSI was oversold here. Okay, here it is. You see what's happening here? The price gap down. Though the RSI was oversold, the price gap down. All right, it gap down. All right, it gap down. So you want to be very, very gentle, because I know there are still traders out there that are trading like the first generation of RSI traders. But just remember that there is another group of smart traders out there that know how to trade the oversold RSI. They can sell even when the RSI is oversold, as you see here. The RSI was oversold here, pointing to us this support here. As the price dipped below it, it retested here. There were sellers. I'm on the daily chart. The reason why I'm using the daily chart today is because a lot of, this is another way, a lot of bad RSI traders, in quotation, all right, bad RSI traders, all right, okay. Another thing that they are doing is that they usually use the RSI on the daily chart. So they are looking for trading setup on the daily chart, RSI oversold. But the daily chart, we know that there are a lot of distortion on the daily chart, and they use the daily chart a lot without even paying attention to the monthly chart or weekly chart to see the bigger picture. As you can see here, this was a break below, retest, and the price gap down, and those traders are losing. Even what is more worrying, there are even some experienced traders out there with a lot of financial resources on their disposal, still trading the RSI, like the old-fashioned RSI traders. So the decision is now yours. What type of RSI traders do you want to be? So if you belong to the first group, well, there's no point to dwell in the past. One should move forward and join a new group of RSI traders and know exactly how to trade the oversold RSI, like a pro. All right. So if I go now, you see now we're on a daily chart. You see that if I go quickly to the monthly chart, you can see that it's just in a declining channel. Here again, it's still price. So price went up, go back down, it violates. So this is what's happening here. Quickly. We want to wrap it now. So you see here, price D below. This is what we call a cycle point. There was a trend, price return to the cycle point, but not only that, it failed to find a support at the cycle point, break below, retest it here, and then start running in a declining channel. You don't want to be a courageous trader, all right? Even on the monthly chart, you can see that the RSI was oversold, and here some position trader will still try to buy this financial instrument just because they are trading the oversold RSI instead of trading the price. So remember that the oversold RSI, if one is trading, one should trade it in conjunction with the market pattern. If it's a declining channel, one may decide not to trade any oversold RSI. The first time that one should trade the oversold RSI in a downtrend is when the price finally came out of that declining channel and exhibit the first higher low, okay, at a support level or bullish chart pattern. Then we can give it a chance and take it gently, all right? All right? Whether one is on a 5-minute time frame, 15-minute time frame, 30-minute time frame, hourly time frame, 4-hour time frame, okay, scalping, okay, the same rules apply, okay? All right. If you have any question or suggestion, all right, put in the comment section, and in due course, I will be recording another video to answer your specific question. As I told traders at 248 Your Wave YouTube channel, I told traders that what we are doing this year, 2017, is to help traders to become a better Your Wave traders. Now, we will do exactly the same thing at Day Pro Trader YouTube channel. We will help traders, okay, to become a better RSI traders, okay? So, get it right, okay? Polish it, okay? Step back a bit, okay? What is working, what is not working, why it's not working, know the 6 biggest trading mistakes, stay away from them, and in all cases, use a top-down trading method and always combine the technical analysis with the fundamental, all right? If it's too much, use a demo account until, okay, you are ready for it, because whenever one is placing a trade, one is competing with the best trader out there. Now that we have a lot of 2/3 of the trading activity when New York is open are performed by computers. The computers are very, very fast. You see, this is what we are talking about. They are quite fast, faster than human beings. So if you made a mistake, those computers will take advantage of it very, very fast, because they know they can predict the price action. They can, okay, go ahead, okay, than human beings. So there is no much room for mistakes anymore. So we want to be very, very, okay, agile and more efficient when we are using our technical indicator. Otherwise, the computer will just play with us. And you see those gap up, gap down, and people wondering why this is coming from, because the computers are, you see what's happening here? Right below that cycle point, retest, look, it gap down. Those are computers. So you'll see sometimes before the market is closed, 5 minutes before the market is closed, New York is about to close, or London is, especially New York is about to close, there are computers identifying opportunity. So they will place the trade with a minimum risk just before the market is about to close. And the next day people see gap up, gap down, and people say, wow, what's going on? All right. Those are computers going ahead, okay, very fast to place a trade. So we are not only competing with smart human beings, we are competing with very, very fast, sophisticated trading algorithms. All right. So we want to up our game so we can, save ourselves. All right. This is the end of this tutorial talking about the good and bad RSI oversold trading methods. Happy trading to you all, and speak to you soon.